Welcome back to the Watch List. I'm Diane King Hall. Time now to dive into earnings from FedEx released last night. Shares are under pressure today. Want to talk about the big picture here. Let's bring in our panel. Andrew Wong, managing partner, Runnymede Capital Management, and Sandra Cho, founder and president, Pointwealth Capital Management. Thank you all so much for joining us this afternoon. Sandra, let's start with you. FedEx missed both the top, bottom line. What are your takeaways from their latest quarterly report?
Hi, Diane. Thanks for having me. Great to be here. Yeah, there's a lot to unpack here. The stock is down about 14% last time I checked today. And, it's really not just a matter of the fact that they greatly missed their earnings expectation, but it's also that the mood, the kind of tone of the CEO was that FedEx faces some really strong headwinds here. They lost this big contract that they had with the United States Postal Service to UPS. They try to streamline things. They have a big initiative called Drive, where they're trying to reduce their overall expenses, but they weren't quite able to do it. Now, it's early on, but it looks like it's still an upward struggle here. So, and then they merged two of their services, FedEx Ground and FedEx Services, to what's called Federal Express, trying once again to streamline things, reduce costs, but labor costs being as high as they are, that's been a struggle. UPS has done a bit of a better job with that. So, for the short term, the stock's going to be under pressure. For the long term, jury's out.
And then, Andrew, what are your takeaways and what stood out to you? We also know FedEx cut their guidance as well. What do you make of their latest report?
Thanks, Diane. We like FedEx. I think that the stock is down, as Sandra noted, nearly 14%. And I think that that's a strong reaction to a relatively modest EPS guide down of 5%. The stock remains attractive at about 12.5 times the next 12 months consensus earnings estimates. So before we get into the positives, I just want to take a look at the earnings report more broadly. I mean, there was a decline in demand for FedEx's services, particularly the U.S. domestic package market. And because FedEx is considered a bellwether of the U.S. economy, this suggests that businesses are reducing their shipping activity and consumer spending is down. In my view, you have several different factors happening. You have a contracting ISM readings below 50, the Federal Reserve's 50-point interest rate cut, and now FedEx's challenging quarter. It all collectively points to a deteriorating economic outlook, and this could be a warning to investors that the industrial sector earnings season in October could bring more negative surprises.
So do you think then for FedEx, though, that, because, okay, to be fair, when you look at a chart of FedEx compared to UPS, FedEx is performing better. But in general, when you compare it to the broader market, it's not performing so well. Is your view that this is a macro issue for FedEx? Because to me, when I look at the report, it doesn't seem like it's just macro, Andrew.
I think it's a combination. I think that it is macro in a sense that if you look at the industrial sector, many of the industrials have been underperforming the S&P 500. I think that the good news is that FedEx remains focused on its digital transformation initiatives. The company is investing in technologies to improve efficiency, reduce costs, and enhance customer experience. And really, this Drive program is expected to cut costs in the range of $1.8 billion in permanent savings this fiscal year, another $2.2 billion in fiscal 2025. So I think investors should recognize that these efforts can drive margins over time despite near-term pressures.
And then, Sandra, what turns things around for FedEx? What are you paying attention to when you think about the balance of the year?
So I agree with Andrew in that there are some positive things happening with FedEx, like the Drive initiative that is going to cut costs. Their goal is $4 billion for fiscal year 2025. And, I think that those are some positives, especially like international shipping is up, and that kind of compensated for some of the decline in the domestic shipping. But I will say that, overall, here you've got this really great name that isn't going away, right? Shipping is not going away. There is this macro thing. It's not entirely the entire story, but it is a big proponent. It is a big part of it. is that consumers are being more careful. They are shipping, but they're opting for the less expensive options, right? Maybe not the priority overnight, but maybe the 2-day shipping and whatnot. And, that is going to hurt FedEx, at least for the short term.
And then, Andrew, I want to give you the last word. If you can wrap it up for me in 30 seconds, especially when you talk about positives. What are the positives that you see for FedEx through the balance of the year?
Yeah, I think that the cost cutting, bringing capacity down, increasing prices, that came through. It was just a little bit late this quarter, but looking to the next 4 quarters, these initiatives can drive EPS growth really quickly. 2 more positives worth mentioning. FedEx is conducting a strategic analysis of its less than truckload or LTL segment. So there's an expectation there that the company may sell or spin off FedEx Freight, allowing FedEx to concentrate more on its parcel and logistics businesses. So that would be realizing some income. And then FedEx expects to repurchase $1.5 billion in common stock during fiscal 2025. So a couple of good catalysts there.
All right, well, watch out for those catalysts. The stock down just shy of 14% today, but still up for the year. That was Andrew Wong, Runnymede Capital Management, and Sandra Cho, Pointwealth Capital Management. Thank you both.